Hello, everyone. Good morning, good afternoon, good evening to everyone there, wherever you may be. Clive is going to be on today. Let me know if you can hear me well. Yeah, great. So those of you who are watching this recorded, if you want to get to the topic, move about 8 minutes forward because I'm greeting people here. We got for the disenfranchised, good evening. Nigeria is attempting to run its gas pipeline through Niger into Europe, but Niger isn't playing ball. Could this be the Euro Black Swan event? I don't know. I mean, the Euro, people have been calling for the end of the Euro for for the last decade, and it's still around. I'm not sure if it is. I'm not sure. So we've got Spock 2024, Pablo Pina. Hi, Pablo. Rick from Connecticut. Wayne Shinton from Dudley. Endurorama from Quebec. Urban Sombrero. LG, do you think they will cut rates when U.S. economy rolls over? Yeah, they probably will, and they'll have to do QE as well. I mean, we're going to talk about that. Paul says, hello, Mario and Rudy. Rudy is not here right now. He's with my wife. Audio and pic are good. Gordon D, Echo. Hi, Echo. Yeah, Clive will be on soon. Anton Spoji or Spoyi, Bratislava, Slovakia. Andrew Watson. Hi, Andrew. Silver Drill Pickle. MW says Moody's downgraded 10 American banks yesterday. Yeah, I think it's going to get worse for the banks as bond yields continue to rise. I spoke about bond yields yesterday. I did a video yesterday. Pete Dutoit from South Africa. Nice to see you here, Pete. Thomas Gallows. Happy pre-Mad Max. Palapina, we want Rudy. Yeah, Rudy will be back tomorrow. Manic Miner. Hi, Manic. Tommy, good evening, Mario, everyone in the live stream. We got some Noah Good from Stockholm. Gold and silver and spot price kind of near frozen. Yeah, it looks like right now the bullion banks are in control of the paper market for now, but I think it's a good opportunity to keep stacking. It's crazy how undervalued gold is in dollars, because in other currencies it's done very well, but it looks like Clive has just come on. So we'll let him on. Yeah, I think, the fact that gold is pretty much where it was in 2011 when the national debt was about 12 trillion and now it's like 33 trillion. It's not going to last forever. I think we will see it, spike higher. Hi, Clive.
Hello, good evening, Mario. Can you hear me?
Yeah, I can.
Good.
So
I've got some new headphones, so I thought I'd try them.
Yeah, so I entitled the live stream, you've probably seen it, and it's because of what I read, that what you said, melt up or spiraling debt. So maybe we could start by talking a little bit about that, what you mean by that, viewers.
So good evening, Mario. Thank you very much for having me on your show.
Oh, you're welcome, and thanks for coming on the show.
So the government's got a budget which is planning to spend a lot more than it earns in taxes. So they'll have a budget deficit as far out as the eye can see for certainly for decades to come. That's the plan. And to finance that deficit, they have to borrow money. And the plan is for the amount of debt versus GDP to continue to rise as a percentage. We're currently at about, in terms of debt owned by the public, about 97% debt to GDP ratio. The official plan is to take that to about 120 debt to GDP ratio over the next 10 years. But that does mean borrowing an awful lot of money. In fact, the plan is to virtually double the amount of debt owned by the public. And the public, we've seen in the last few weeks, 4 or 5 weeks, they borrowed about over $1 trillion. And that has caused interest rates to rise quite a bit. I think it's about 0.6% it's risen. And the result of that is that, not the result of that, they need to keep borrowing money. And as they borrow money, the public's appetite to take on more and more of this debt is not as high as it was. So they have to pay more and more. So if they continue to do this, by the end of next year, we should be, if we extrapolate what's happened so far, the interest rates could easily rise to over 5%, 5.1%, I calculated.
Yeah. Yeah. And someone just gave a super chat. Thank you, Jeff. And he's asking, Clive, why do people think the Fed will cut? I guess you're explaining why, because there's so much debt. Yeah, maybe you could compare to the 1980s. You wrote that there's 4 times more debt. So a 10% yield on the 10-year would mean like 40% in 1980 term, right?
So back in 1980, we did have 10% interest rates, but there was a big difference. The debt to GDP ratio was only 30%. Right now, if we take the full debt to GDP ratio, including the debt which is owned by the Federal Reserve, we're at 120%. So we're 4 times as much today as we were then. So if we do get to 10% interest rates, that would be, in terms of what it's costing the Treasury, as if we had 40% rates back in the 1980s. Obviously, that's an impossible number. We can't possibly get to such high numbers. I've done my maths on the Federal Reserve's budget, or it's not the Federal Reserve budget, the government's budget, which is available on the Congressional Budget Office website. And according to my calculations, not my calculations, a fact, they got it very, very wrong back in 2012. I'm just looking here at the projection that they made in 2012, Mario. In 2012, they forecast that the debt to GDP ratio would get down to 58%.
Yeah, now it's almost 100.
Yeah, it's this is debt owned by the public. It's now at 97, going on. Well, it's nearly that's at the end of 2022. It's now going to be about 100%. So instead of 58%, they're at 100%. So they missed their budget massively, and that wasn't a big percentage over every year. They spent about 2% more than they planned every year, and they collected taxes about 1% a year less than they planned. But the compound effect of that really accelerated the level of debt. And I projected forward, if they get their official budget, which is planning to increase the debt to GDP, planning to have a deficit every year for the next decade. If they miss it by the same percentage as they missed it in the past, we will end up in 10 years, in 2033, at nearly 200% debt to GDP ratio. And if we get there, that would also imply interest rates of around 10%, which would soak up significantly more than the government is collecting in taxes. So I don't think we're going to get there. I think that's impossible. I think that because that would create spiraling interest rates, and I think the Federal Reserve will need to step in long before we get there, which is what I'm talking about, a pivot. Now, I don't think that's going to happen next week.
Sorry, just interrupt you a second. I've got the U.S. debt clock back in 1980, so people can see. So the gross debt to GDP was 35.4. It's amazing. The budget deficit was 55 billion. Now it's like in the trillions. Yeah, granted, the GDP has gone up 10 times. It was 2.5 trillion at the time. but the debt has gone up, like more than 30 times. It's not sustainable, is it?
That's exactly the point. So something will break before we get to 2033, which is where the budget stretches out to. And it's difficult to say what will break, but I think when it starts to break, the Federal Reserve will find an excuse to step in. They'll say, oh, there's a problem, there's a disaster, or something's happened, and we're going to have to step in and buy up treasuries. This is called yield curve control, where they buy up the treasuries and stop the rates from spiraling out of control. Now, when that happens, that effectively is what they call a pivot. It means that they've gone from quantitative tightening, which means reducing their balance sheet, to quantitative easing, which is increasing their balance sheet. And that would be very significant because it means inflation is going to come back with a vengeance. So when they eventually get around to pivoting, I think that will be very bullish for asset prices globally. I'm not really expecting it to happen next week or next month. I think the Fed is going to inflict a little bit more pain on the public at large before they do it. So we might be 6 months, a year, 2 years away. But when they do pivot, it'll be very, very explosive for asset prices. And that would include gold, which you can see on the screen behind me.
Yeah,
but I think
those all your gold bars?
Yeah, I keep them in the drawer.
But I see I've got the balance sheet here, Clive, and I mean they last week they actually increased it by 2 billion, but like you said, they could keep lowering it a bit more. This is the assets of the Federal Reserve. We can do this maximize. Last time they tried to do it, they had to pivot here, and I did one too with the national debt. The national debt is the red line. So it's interesting because when they started QE here at the '08 crisis, that's when it looks like the national debt is started to take off, and it started taking off here too. And the projections is for it to keep going up to double almost. And yeah, I can't see that balance sheet actually going to zero or back to like it used to be around 800 billion.
Yeah, well, there was a plan back in 2012. In fact, if you allow me to share the screen, Mary, I'll just show you what the plan was in 2012.
Okay, let me just enable here. Okay, go ahead.
Okay, so I'll do share screen, and I bring that desktop up there. Now, I wonder if you can see the desktop that I'm looking at.
Yeah, we can see that.
Okay, so this is from the date at the top right-hand corner. It's August 2012, and it shows the Congressional Budget Office's the budget as we stood there where my mouse is. That's 2012, and we're at about 77% debt to GDP, and their baseline projection was to go down to about 58% debt to GDP by 2022. They had an alternative scenario, which is the lighter blue line, which is slightly higher, and that shows the debt to GDP ratio going to roughly 90% if certain exemptions or tax exemptions, which were supposed to have come to an end, didn't come to an end. But the rule or the law was that these tax exemptions were going to come to an end in 2013, and therefore things would start to get, so people would be paying more tax. But in fact, they rolled them over. So we actually had a situation which is a lot worse than you see on that chart. Now, just overlay where we really are. So here we have still the same line in dark blue, what they planned, in light blue, the worst case scenario. And the pink line is what actually happened, which you can see is debt to GDP ratio much worse than what the worst case scenario they had. And you can see the plan now from 2023 showing the debt to GDP ratio going up literally forever. And I expect, knowing by the track record, it's going to be quite a bit worse than that.
Yeah, and Clive, I remember when George W. Bush got elected, I think the Clinton administration had run a few budget surpluses, which were technically probably not true, but he was projecting that by 2008, the U.S. would have paid down its national debt, the whole debt. And you saw what happened in 01, a crisis, and everything went out the window. So I think the fact that the Fed is saying, oh, we're not going to pivot, we're going to unwind the balance sheet, we're going to do this, this, and this. There's something's going to come out of left field, and it's going to give them the excuse to pivot. That's what I think the Fed needs. Joey Sox, thank you for your super chat. Don't you? Is that something you think about as well? They'll have an excuse, but they might not need an excuse.
Yeah, there'll be a natural disaster, a war, a pandemic, a banking crisis, some black swan event. We have several per decade, so there's bound to be one, and they'll use that as their excuse.
Oh, Clive, and the viewers, a lot of you know that I like golf, and I was going through Instagram earlier today, and they showed Ben Hogan, who was like a great golfer in the 40s and 50s. And even though I wasn't around, I do like Ben Hogan a lot. And they said, oh, this is when Ben Hogan was 29. So that was, he was born in 1912. So that was around in 1942. And I thought it was interesting because I look at the sign to his left, and it says Hogan, right? And his score, I think he probably was 13 under par or something. But look at on top here, it says buy more war bonds. So can you see it?
Yes, I can. Yes, oh, that's the sign, isn't it? Yes, standing up there. Yeah.
So that was around here in 1942. Yes, the yields went down a bit because they did yield curve control actually during the war, and also up until 1952. But if you had bought like a 20-year or 30-year war bond back then, look at where, you wouldn't have fared well. So my point here is they don't be fooled. They use sports and patriotism to sell you bonds when it's the worst time. When they do that, it's the worst time to buy bonds. And I'm not having a go at Ben Hogan. I don't think he was a decent guy. I think, he started from nothing, but I just thought that was interesting. Buy more war bonds right at the bottom, of yields here. And then we had a huge bear market. And actually, as you see here, I think we closed around 418 on Friday. Here it says 415. But to me, it looks like, we went from like 0.3 to like just above 4, and then it corrected a bit. It looks like we're going to go higher. Like you said, we could easily go to 5 or even 6 in the next year or two.
Well, I'm looking at the 30-year bond, the sterling 30-year bond, and it certainly looks like we're about to break out into new territory of higher yields.
Yeah.
I'm not much of a chartist, but that's basically been the direction of travel for since not even for quite a while, but I'm looking at since the start of the year. The yield back at the start of the year was around 3.6. It's now 4.7, and that peak was 4.73.
Yeah.
4.78, I see, on the 30-year.
Yeah. Oh, the other thing I want to talk about with you and to let the viewers know is about, you probably heard this term as it pertains to Argentina, the corralito, which is the corral. And this is when Argentina went bust in 2001. And at the time, $1 US was one Argentine, I think it was the sol or Argentinian currency. It had been pegged for like 10 years, I think. And then all of a sudden the peg broke. Argentina, all the banks were in trouble. And people thought they had US dollars in the banks in Argentina because the currencies were 1-to-1. But what the Argentine government did, they forced even international banks like Citibank in Buenos Aires, and they forced them to give them the dollars because they needed the dollars. So the people who thought they had dollars in Argentina, they were left with the with the third world currency, and it was called the Corralito. And this happened as well in Lebanon in 2019 and 2020. People thought they had dollars, and and it had been pegged for 20 years, and then all of a sudden they took people's dollars. And the reason I'm bringing this up, because I know people with who have quite a bit of money, and they bank with big American banks, and they think that buying gold with them is safe, and I don't think it is. I think they could do a Corralito when things get really bad for the dollar and gold goes through the roof. A lot of people that think they have gold, let's say with I'm not going to say the name of the bank, but most people can guess. They will say, no, we're going to give you dollars, force majeure. And that's why I think physical is really important. This is a lesson here. And because dollars were like gold for Argentinians. And I think, they were able to peg the dollar to the peso or whatever it was called at the time for like 10 years, but eventually that broke. And I think they do the same thing to the price of gold and dollars. They peg it and suppress it, but eventually it's going to go. And I think a lot of people who don't have the physical are going to be sorry.
Well, I think there's a lot of people at the moment who are rather disappointed by the fact that gold doesn't seem to have done anything. Of course, that's part of the manipulation, which is causing people to think that. And I think those people who take the decision to sell their gold now are choosing the worst possible moment to do it. I'm not seeing gold shooting up anytime soon. I mean, I think we've got higher interest rates coming from the Federal Reserve first, which isn't particularly good for gold. But at some point, it's going to break, and then you'll be seeing gold jumping up $50 or $100, over a weekend, and you'll have missed the boat.
Yeah.
So I think, coming back to whether you put your gold in a bank or have it physically, there's only a limit to how much you can keep at home. I mean, I think if you're the average Joe, there's nothing wrong with having a collection of coins in your house. But if you are a wealthy person with lots of millions and you want to allocate a decent sum of money, you don't want to have hundreds of thousands of dollars of gold lying around in your house. That's dangerous. And so you should keep some coins, but you really want to be putting them in safe custody, even if it's dangerous psychologically that the bank might seize them. But I think you've got no choice if you've got too much.
Yeah, or maybe try to find a vault that's not related to a bank. But that's what happens when people lose their dollars here. Look, riots in Buenos Aires. So
I was speaking with some Argentinians a couple of days ago and asking them about that. And he said, yes, we couldn't get our dollars out. That was the problem. But if you were rich like we are, it didn't really matter. You had your property, you had your stock market investments, and you had other things. And of course, they had gold as well.
Yeah, that's right. LG says economic English writer Russell Napier has written that he thinks the U.S. Congress will pass laws to force all kinds of institutions to buy long-term U.S. bonds. That is possible.
Depends if they got the money. I mean, the plan is to the official plan over the next decade is to literally double the number of bonds owned by the public, the treasuries, and that's more than the money supply which exists today. If you take M2, it's not there. So they'll have to expand the money supply a bit if they want people to buy those bonds.
Yeah, and I don't think the economy in the US nor here in the UK is doing as well as we're told, mainly because there's still a lot of deficit spending. And if you look at the equation for GDP, it adds government spending. So if government spending has a deficit of 6 to 10% of GDP, that means that there's extra, it adds to that equation. Clive, I wanted to go over this here, and because I always think my view is the Austrian view that the smallest, the best thing is very small government, and that government is there to protect property rights, and that's about it. And this is what's happening now in the UK with rising interest rates. And I don't know if you heard of the Help to Buy scheme that was introduced in 2013. So basically, this article is saying, a lot of these people who use this scheme, and the scheme was created by this guy here. Let's see, George Osborne. He was the chancellor, Help to Buy in 2013. Basically, what that did is that allowed people who couldn't really afford to buy, let's say, a £200,000 home. The government would give them like a huge, they only had to like put 5% down, and the other 20% would be the government. But now with interest rates rising, a lot of these people are they're realizing they can't really afford this home. And in London, the proportion was like 40%. So I think it just goes to show that people need to be careful when they're told by governments, oh, we're going to do this to help you, that it usually ends in disaster. So look at this here. Monthly payments increased from 700 to 1,000, which isn't that much, but I think it could get worse.
House prices are to a large extent determined by what people can afford to pay for them. And in the UK, mortgage costs have at least doubled. So the average Joe who's trying to buy a house certainly cannot pay the price of a year ago. He's going to be able to afford a lot less. And the same applies to the United States. Now, the difference between the United Kingdom and the United States is the United States, most people have long-term fixed rate mortgages. Whereas in the UK, they typically have a mortgage deal which expires after 2, 3, 4, 5 or 6 years. And then that's a fixed rate. And then they go on to a floating rate. So the pain is coming a lot quicker in the UK. But on both sides of the Atlantic, the price that people are willing and able to pay for a house depends on how much they can finance it. And if you're a new buyer in the United States, your interest rate has doubled. And if you're a new buyer in the UK, your interest rate has doubled. So people literally, the bottom has fallen out of the market in terms of buyers. Buyers aren't there. Yeah. And the sellers are still clinging on, hoping to get last year's prices. On the other hand, especially in the UK, there's a huge pent-up demand for property. There just aren't enough properties to go around for all the people who are looking.
Yeah.
So perhaps it's not going to fall that much, but it's certainly on the way down in the moment.
But this Help to Buy scheme, that's ended. So that's going to also...
That's going to hurt, yeah.
Yeah, that's going to hurt because not as many people won't be able to pay as much for houses. So I thought that was quite interesting. Clive, what are you seeing in terms of the banks, and have you got any view on what's going on? Do you think like the rising yields that we're seeing could, it will probably hurt them, right? Because the banks, like the Fed, they own a lot of bonds, right?
So I read an article in the Financial Times yesterday, I think, or was it today? I can't remember the number, but they mentioned I think it was something like 23% underwater across the board. It wasn't taking any individual bank, but basically the loans that the banks have made are worth a lot less than the face value. So there will be quite a few banks which are, to all intents and purposes, insolvent because they've given out long-term loans, which are now down in value. Why are they down in value? Because they've given out a loan which they can't get back, and the interest rate is probably fixed for several years. That means that they are earning less on the loan than they would have to pay depositors if they paid them a market rate. So I think there's probably quite a few banks, certainly some banks, which will be insolvent, and I think we will see some more bank rescues in the coming weeks. And rates are continuing to rise, so that's definitely hurting.
Yeah, someone's saying here, shorelines. Any idea why Rick Rule asserts that there's no manipulation of gold and silver? Well, yeah, I know Rick Rule, and he's a clever guy. He's in the precious metal space. I'm not sure why he says that. Maybe because he works with a lot of the banks and the big financial institutions. I saw that BlackRock bought a lot of PSLV, but I think you look at the there was a WikiLeaks document from 1974 it was communication between the State Department, the U.S. Treasury, and bullion dealers, and the U.S. Embassy in London and UK Treasury officials about gold, because in 1974 they were preparing for gold to become legal again in the U.S. So they were wondering if there's going to be a rush to buy gold by the American public. And one of the dealers said in the documents, the idea to start a gold contract on COMEX, and the gold contract is GC on COMEX, and it started trading on the last trading day of 1974, because the settlement was the first trading day of 1975, and the dealer said, we think this is a good thing because it will keep gold volatile, the futures, and it will keep the public away from buying physical. They'll just play the price of gold and silver. I see people on Twitter who are supposedly gold bugs and silver bugs, and they say, oh, I just bought some silver, and then 2 days later say, oh, I just sold it. So, but they're not really buying gold and silver, they're trading the price.
They're doing the contracts for difference or something like that.
Yeah. So that's I think what they don't want gold and silver to do is to go up like 10% every year, which is what gold basically has been doing for the last 20 years, well, about 9, because then everyone would say, well, let's buy gold. So you need to keep it up and down. You need to frustrate people because you don't want the public involved. So I basically think Rick Rule is wrong. And if he wants to debate me on that, he can come here on the channel. I don't know what your view is, Clive, but well, I think the key is to be patient.
Yeah, well, I can't prove that there's any manipulation, but what I can say is that if you're a gold miner and the price starts to rise, your bank, which could be JP Morgan, Goldman Sachs, whoever, is going to approach you and say, would you like to borrow some gold? Because you can always dig it up out of the ground later and pay us back. And obviously, when these banks lend gold to the gold miners, 2 things happen. First of all, the bank which is lending the gold has to borrow it, and I don't exactly know where they borrow it from, but I can imagine that the Federal Reserve or the Treasury might be lending out some of the gold which they own. I don't know that, but it's a possibility. But when they lend the gold to the gold miners immediately sell it. Now that's all well and good as long as the gold price doesn't move too much. But if the gold price takes a leap, then there's going to be a margin call. And if there's a margin call, those gold miners will be, if they don't have the cash, are going to be forced to buy back that gold at the new higher price, which is the moment when we could see large increases in the gold price because it becomes self-fulfilling. But of course, as that happens, the more solvent miners will still be offered if they want to borrow gold. But I think they'd be mad to do it. But who knows? Some will be at the wrong end and get caught.
Yeah, and I think the bullion banks as well, they just lease gold from the central banks. Like the Bank of England has a lot of gold, not UK gold. They keep gold for other people. And I think a lot of times they do it themselves. And in London, they can rehypothecate gold many times. So I think, recently when gold got getting near 2,000, I'm sure they are leasing a lot. Someone's asking here, maybe we can look at some of the questions now, Clive, if you don't mind. Someone's asking, when do you think the Bank of England will start cutting rates?
I think Gordon Brown is a bit of a follower.
You mean Andrew Bailey?
Sorry, not Gordon Brown. Andrew Bailey. I'm thinking of.
They're both quite.
I think he's going to be a bit of a follower. So I don't think he'll be the first to cut the rates. And I think there's also a little bit of a game going on between the ECB, the Federal Reserve, and the Bank of England to see who blinks first. But as soon as one of the 3 central banks cuts their rates, I think they'll all, or even pauses properly, I think they'll all do the same. When I think it's going to happen, I don't think it will be this year. If it does happen this year, it'll be right at the end of the year.
I see. Someone's asking here, Ricardo Calo, excuse me. Hi, Mario and Clive. What do you think about the Bundesbank thinking about revaluing their gold holdings? I hadn't heard about that. I had heard maybe last year or early this year, a Dutch central banker saying that they could revalue their gold. I mean, I think not just the Bundesbank, but even the Fed, the Bank of England, they're sitting on a lot of losses. So yeah, that is an option.
Yeah. So if the Fed, well, first of all, one could argue whether the Fed owns the gold. I actually believe it belongs to the Treasury, and the Fed has just got a pledge of the gold from the Treasury for money it lent them back in the 1930s. But be that as it may, let's assume that that gold was revalued. I think I worked out it would give them about $500 billion. Now, $500 billion isn't going to cover the loss they've currently got on their bond portfolio, which is probably at the moment over $1 trillion, because they've got a lot of treasuries which have gone down in value. So it would be an idea. It would shore up the balance sheet of the central banks, but it wouldn't get rid of the insolvency that we currently have.
And what about the Bundesbank? Have you heard about?
I haven't heard about the Bundesbank, but I believe, and I might have got it wrong, that the ECB was marking to market the gold price anyway.
Yeah,
but I might have got that wrong.
That's what I always thought. The ECB marks gold to market, but
so it makes sense for the Bundesbank to do the same.
Yeah. Olivier Leroy, thank you for your super chat. What about the Moscow gold standard? I think is the Moscow world standard, they call it. I think they're trying to compete with the LBMA, mainly because a lot of the Russian LBMA members were kicked out of the LBMA. And I think it's something that could develop, but I don't know. I mean, what do you think, Clive?
Well, I don't think I'm going to be flying to Moscow with my rubles to get some gold. So no, the place to, from my perspective, I'm in Switzerland. The place to buy gold is here in Switzerland, where you can buy it tax-free, and you can buy it, if you're buying the kilogram bars, you can buy it at the market price, virtually with no spread at all.
Yeah, I think what Olivier is saying, though, is they're trying to develop their own bullion market, and I think they could, especially if the other BRICS nations or the East Asian Economic Area, they could very well possibly develop an alternative to the LBMA. So we'll just have to keep an eye on it. Yeah. Let's see if any more questions. BRICS. Oh yeah, the BRICS, of course, they're going to meet on the 22nd, which is a week from Tuesday, and Tuesday happens to be the August 15th, which is when Nixon suspended the convertibility of the dollar temporarily. So for 52 years, the U.S. has been defaulting on its obligations. You know, people think the U.S. has never defaulted, but they used to promise to pay 1 ounce of gold for $35, and they haven't done that since 52 years. What's your view? Do you think people are hyping too much about a new a possible gold system and the BRICS? What's your view on that?
I don't think it's hype. I mean, I think one thing which is sure to come out of this meeting is that they'll agree to trade between themselves in domestic currencies, and the next logical step, if they do that, would be to have some sort of international clearing bank. I don't know if one exists, but certainly it would make sense to have an international clearing bank and to have a mechanism to clear when they don't have enough currency. So the logical step for me, and I don't think this will come out of the meeting, but it would be nice if it does, would be for them to set up a bank. Each country contributes some gold, and then they agree to settle in their domestic currencies. But if they don't have enough of the other one's currency when they buy their goods, they would have to pay in gold. That would be the ultimate settlement mechanism. There is some talk about Saudi Arabia getting involved and introducing a gold-backed currency with them. I think it's just speculation. I haven't heard anything definitive, but I think I will be sitting with bated, with my ears glued to see what comes out of this, to see which way the wind blows. And if you haven't got time to look at that, just keep your eye on the gold price. And if anything's going to happen, the gold price will start moving.
Yeah. There's this guy here on Twitter, Gold Telegraph. He's quite good. He's got like 275,000 followers almost. And he tweeted, was it yesterday? The United States is seeking assurance that Saudi Arabia will price its oil sales in US dollars, not in Chinese currency. And he says, we are in a financial war and many don't even know it. And I don't know if you remember, there was a Saudi government official. He was in Davos this year and he was being interviewed, and he said that they want to trade in all different currencies, still trading dollars. So I thought that's quite interesting. So
yeah, I think it makes sense for the Saudis to sell their oil to the buyers and take the domestic currencies instead of the US dollar. But of course, then the question is, what do they do with that domestic currency? It depends whether they can buy something back for the country where they got that currencies. If they're selling oil to Brazil, for example, I don't know where they sell it to, but or will they be able to do something with the Brazilian real?
Or they, they could, if they have a gold system, they could exchange the surplus real for gold, because Brazil, I think in 2021, they increased their gold reserves by almost 50%. And let's say if they sell oil to China and they receive yuan, they can, if they have surplus yuan, they can go to the Shanghai gold exchange, sell the yuan and buy the gold and take physical delivery. So I just think the fact that I don't know where he heard this, but I don't think he would make this up. The fact that the US is seeking assurance, that shows weakness to me, that they're worried about the Saudis diversifying.
I'm quite sure somebody has said that to Saudi Arabia. There's no doubt someone has said it, but whether the Saudis take any notice or not, I don't know. And that wouldn't really have the force of any threat. What are they going to do? Say we won't buy your oil if you don't sell it, if you don't take dollars? I don't know. I don't think that's going to happen.
Yeah. The other thing about the BRICS that I would say, there's this summit. I think there's going to be over 40 countries that have been invited. So it's not just a BRICS summit. I think there's going to be, I heard even 60. They've invited as much as 60 countries. I don't think they've invited Macron. There was a
speculation. Yeah, I heard that. Yeah, so, he wanted to be invited, and apparently wasn't. Well, I don't know if they uninvited him or just didn't invite him or what. But anyway, yeah.
Do you have you got any view on what's happening in Niger, in Africa? Someone said that apparently Nigeria was trying to build a gas pipeline, and it would go through Niger up to North Africa, and Niger doesn't want to do that, and that gas, of course, will go to Europe.
I heard something about that today, but I wasn't really paying attention. Obviously France is getting pretty upset with the change of regime, and who knows what's going to happen. I don't have a view.
No, yeah, I mean, there's a lot going on, and I think a lot of. I heard as well that I saw that Niger has a lot of uranium as well, and that 40% of the uranium used in the EU comes from Niger. They also have quite a bit of gold. Yeah. What if a nation threatens the Saudi oil fields? Will the US play the hero? That's from over here.
Yes, I think so.
Oh yeah, they will have an excuse. I mean, it's what happened. Do you know the story of Kuwait in 1990 or 91? Saddam Hussein invaded Kuwait. But apparently he got the nod from George Herbert Walker Bush, said, go ahead, because apparently the Kuwaitis were drilling horizontally into Iraq and getting oil from Iraq. That was the reason. So they said that fine, you can go in, and then they went in and went against them. So yeah, the U.S. You got to be careful with them, what they tell you, because
Well, the USA has got a long history of defending countries with oil because historically they needed to buy it. If you go back to 1987, Iran was at war with Iraq, and the Americans basically got some revenge on Iran by sinking a few of their rigs. And then Iran declared a war on America, but nothing actually happened.
Over here is saying, heard the lake feeding the Panama Canal water level low, restricting cargo ship traffic. How will that affect the U.S. economy? Well,
canal. I thought the canal was from one sea to the next, from one ocean to the next. I didn't know it was fed by a lake, but then I've learned something.
Yeah. What do you think, Clive?
Well, it would be a big problem if the Panama Canal closed down. I mean, any of the sea lanes closing down just adds to costs. It puts up prices.
Yeah.
Let's just hope that's not true.
Yeah, I think internationally for the U.S. it could be a problem. But did you know that apparently there's a law, I think it's the Jones Law. It's like over 100 years old, and something about merchant shipping in the U.S. And for example, a foreign ship, let's say, delivers cargo to Miami, and then there's still more cargo. That ship can't go anywhere else in the U.S., and that's why there's a lot of trucking in the U.S. So maybe what he's asking is how would it affect transport of stuff from the East Coast to the West Coast? I don't think it would, because it doesn't allow international ships to stop in New York and then go to LA. But I guess it would if a ship is coming from, I don't know, Nigeria to LA, it would use the Panama Canal. So that could be a problem. I don't know.
Yeah, well, there's an awful lot of ships going through all these waterways all the time, and yeah, it would be an expensive problem if they have to go around around South America or by another route.
IU Wraith is asking, Clive, are corporate bonds preferable to government bonds in the face of systemic risk due to rise in interest rates? I'll let you answer that, and then I'll give my opinion.
Well, the fact is the governments are going to run into a problem of servicing the debt at some point. The interest is going to exceed what they collected taxes sooner or later. That's basically means you're not going to get if you have government bonds, you might not get all your money. I've had a couple of experiences of that. My mother told me my grandfather had some of these war bonds that you talked about, Mario, and at some point they changed the interest rate on the war bonds and made them perpetual. Except they weren't perpetual when the interest rate went to zero. They decided to repay them. And the second experience with government bonds was the Greek government debt, where we all knew there was going to be a hefty haircut. Little did I expect the EU to lean on Greece to change the rules. So investors like me didn't rank pari passu with all the other investors. So the ECB got paid in full and all the other investors got about 10% of their money. So, we could expect, if you own government bonds, that when the crunch comes, you're not going to get paid, whether that means you get a haircut or whether you get paid in a defunct currency or whether you get paid in luncheon vouchers. But basically, you're not going to get full value. So corporate bonds, if it's of the same credit quality, would be preferable in my view. I would, and again, I would keep my maturities short. I wouldn't go for anything like 10 years. I'd go very short.
Yeah, and also with corporate bonds, if there's a currency crisis in the US and any bond, even corporate bond priced in US dollars, I think would have problems. But the company might be a good company. So, yeah, but like you said, it's short.
The way to play corporate bonds, there are a couple of, I haven't got the symbols in my head, a couple of ETFs, which one holds large collection of investment grade corporate bonds, and there's another one which holds a large collection of non-investment grade corporate bonds. And you get a monthly dividend, and you're very, very diversified because you're in hundreds and hundreds of bonds through the ETF. That's the way to play the game. So you don't have specific risk of one company.
Yeah. Someone is asking here, if Donald Trump became US president again, what changes does Clive think he would make to the US economy? Any view on that?
I don't know. I don't think it's the president which can change the economy.
I know. I never think that it depends on the people, really, and
it's down to the Congress, the Senate, and finally the president, and they have to have all three basically agreeing on these things. So
yeah, and the bureaucracy, they're so powerful as well. They can tell the president, you can't do that. But I would say under Trump, the U.S. was still spending a lot, and still, I think the budget deficit in 2019 was almost 6%. And don't forget, people equate Biden with inflation, but all the QE, most of the QE was done in 2020 when Trump was president. And the rising prices that we saw in 2021 was a result of that. So I'm not defending Biden and I think that's the problem with people, that they think governments or a different party will do better. I think, unfortunately, the party system is bad for people, really, because you get one party for 8 years and they do things, and then people say, oh, they did this badly, and then you get another party and they change everything. And the people who gain are the big corporations, the politicians, and the people, the general public, that never goes ahead. That's the way I feel. I mean, you look at Nancy Pelosi and Barack Obama, Tony Blair, they've become like billionaires. So
how?
Sorry?
And how do they get so rich? That's my question.
Writing books and giving speeches, isn't it?
Yeah, exactly. Yeah, you get rather overpaid for a speech.
Yeah, it's like
but the history of, at least in the Western governments, the history of overspending is a very long history. It doesn't really matter which political party's in power; they all have been overspending, and the problem is, at least in the past, they tended to have plans to reduce that overspending. Now, it doesn't matter who's going to be in power; they're going to overspend forever. There's no plan to rein in the spending. The one thing they could do, I mean, it's let's just say on the spending side, it's almost impossible to do anything. The one thing they could do, and I'm not a fan of this, but maybe raise taxes. That's about the only thing they can play with now. If we look at the USA, they've got 2/3 of their budget is what they call non-discretionary spending. Another 1/6 is military spending, so they're not going to cut that. That leaves 1/6 to play with, and even if they cut that to zero, they would still have a deficit. So there's not a lot to play with. So the only thing they could do really is raise taxes, but I don't think there's much enthusiasm for that at the moment.
I watched, I watched this Netflix documentary yesterday. I think my wife finished watching it. It was really interesting. It's called Painkillers, and it's about OxyContin. It's like that was
heard of that.
Yeah, I mean,
it's a epidemic in the United States, isn't it?
Yeah. It was about 20 years ago. It's still probably around, but it just goes to show you can't trust the FDA. Anyway, let's see. Any more questions? Yeah, it's your chance. Oh, Clive, I wanted to ask you about what do you think about the Bank of Japan, because it looks like they're allowing, they're kind of tightening, and that could be also negative for the Western bond markets, right?
Yeah. So the Bank of Japan previously had a cap on its 10-year BOJ, on the Bank of Japan bond at 0.5%. And they recently, a few weeks ago, said that cap has gone now. Now the range they're going to have is 0.5% up to 1%. So immediately afterwards, that the yield on the 10-year rose to about 0.6%. I think I was looking at the screen, it's 0.88 today. but it's actually it's looking, yeah, it's at 0.88, but 0.58. It looks like it's heading up towards that 1% over the coming months. Now, the problem with Japan is they've got an inflation rate which is above their target rate of 2%, and they've got a 10-year yield which is well below the inflation rate. So they're a bit of an outlier. And as far as the other thing to say about Japan is they've got a debt to GDP which is way up in the I think it's 230, 260.
Oh, it's 200, 299 the last I watched.
Yeah, it's huge,
Yeah.
which basically means that the government is having to, although the interest rates are very, very low, much lower than the United States, they're having to borrow money to pay the interest on the national debt. And if those interest rates start to rise, the Japanese government is going to be in trouble.
Yeah, that's the same thing the US is going to have, and the UK in the next 10 years. And that's why Japan is still doing QE and yield curve control. Someone asked Clive about TLT, if it's a good investment. TLT is an ETF that mirrors the longer end of the US Treasury curve, average of 20 years plus. I personally think maybe right now a short-term trade, it might go up, but longer term, I see this going lower, because if interest rates and yields keep going up, as Clive and I think, yeah, you don't want to go long TLT. You might want to, I don't know if there's a short TLT.
Yeah, there probably is a ProShares, a short
Yeah.
TLT out there. I mean, anyone who bought that, they could have paid 160, 170%. It's now worth about 95%. So they've lost a lot of money already, and I think they're going to carry on losing for a while.
Yeah, because we've had 40 years up until 2021. We had 40 years of yields that dropped and bond prices that went up. And I think now we're going the other way. Is that the way you see it as well?
Yeah, I'm just looking back. I'm looking at the chart now. This was back in 2020. The price was in the 170s. Now it's 95.
Yeah, I know. Oh, we got a super chat in Japanese yen from Salt Thrower. Thank you, Salt Thrower. 1,000 yen. Isn't Salt Thrower is this Argentinian chef? I think he's based in London. He cooks steak and he throws the salt. Have you seen? And I think he puts gold flakes on the steak as well. Yeah, he's a bit of a showman. Not sure if the steak is any good, but it's expensive.
Well, I expect it's very expensive, and I expect the flakes are very, very small.
Yeah. Someone's saying here, Mario, Andrew Maguire has proved there is manipulation in gold and silver. Well, I mean, I noticed when I bought my first gold coins, Krugerrands in 02, and I was working in front of a desk and following markets all day, and mostly bond markets and interest rates, but I kept looking at gold as well, because now I had gold. And I noticed that every day at the same time, gold would be sold off. And then I was wondering, this doesn't happen to bonds, it's more random.
Yep.
So I've known it even before.
And you probably noticed that was happening on a Friday evening.
Yeah, every day, really, Clive. Every day before the COMEX opened, the regular hour at it was usually 1:20 London time. Yeah, it would be sold. And then after the close of the LBMA, the PM fix, they would also sell the futures. So yeah. Anyway, someone's done they took data for the last 30, 40 years of gold trading in Asia and gold trading during US hours. In US hours, if you bought at the open for the last 40 years, the prices collapsed. But if you look at Asia, it's gone up. So I think it's because the biggest threat to the dollar is not the BRICS or anyone, it's gold itself. Someone's asking me if I'm going to interview John Perez. I probably will. I think I had him on with the Mike and Mario show a few weeks ago. So yeah, but I haven't gotten in touch with him. Someone is saying that the salt thrower is Turkish. Okay, sorry. Turkish Argentinian, maybe. Endurorama Mario, what does Clive think would be the likely catalyst to trigger a rate cut? What would be the short-term, long-term impact on CPI of the rate cut?
So Jerome Powell is quite adamant that they're not about to cut rates, but they're certainly in a pause phase, and he's leaving at the last meeting, he basically didn't give any clues as to what the next move is going to be. I think that we'll probably continue with the pause at the next meeting in August. And after that, it wouldn't surprise me if they go for another quarter point rise. Will that be the last? I don't think so. I think he'll keep going until, I'll talk about catalysts. One, the jobs market starts to suffer. And right now, the level of unemployment in the United States, the official numbers anyway, is very, very low. So that's not a reason for him to pause or even cut. Inflation isn't down to where he wants it, and it looks like it's going to start ticking up again. So I don't think the cut's around the corner, but I think the trigger to cut will either be a problem in the United States because the Treasury can't fund its debt at the higher interest rates, or it might be a problem because inflation is not a problem because the jobs market is in trouble. Or eventually, but I don't think this is going to happen, they get the inflation rate down to 2%. We've got all the central banks, Japan, UK, Europe, and USA, all saying 2% is the right number. But I'm wondering if at some point they don't change that number to 3 or some other number, maybe 5.
Yeah. And I think the next meeting is September 19th, 20th, Clive.
September. Okay.
But it's difficult to say. And I mean, anything could happen out of left field, and then the markets crash, and then the economy slows down, and they cut, and they have an excuse, and that would bring CPI down, I think, because I think that's what the lockdowns did, because you basically turned off the economy. Of course, everything, you're going to have massive unemployment, even though they did do furlough, and all prices are going to drop. So maybe the next thing is a climate crisis, who knows, or anything else, right? Can you or Clive comment on alternatives to tourism for local economies to run on?
Yeah, well, every country's got its thing. I mean, alternatives to tourism, well, gosh, I think you can look at the country and see what they've got.
Yeah, I mean, tourism, or maybe focus on tourism, domestic tourism, because it's going to get harder and harder for people to fly abroad. I think here they're making it, I saw a headline the other day that delays flying out of airports is a lot worse. I mean, the price to travel is getting higher and higher, and I think a lot of people are going to be having to do staycations, they call it here now. And
I think the other thing to note is there's a risk that border controls are going to get tougher. I wrote an article the other day about the relatively new software that some of the border agencies have now got, where they can ask you for your phone if they don't like your answers when you go in, and then they can literally use some software from a company made in Sweden to download everything on your phone and read it. And people don't like that invasion of privacy. So, if this starts to happen more and more, I think people will be reluctant to travel for that reason as well.
Yeah, and I saw that the EU now wants to impose Americans traveling to the EU will have to have a visa. And the thing is that for us to travel to the US, we need something called, is it ESTA or something? You have to
Yeah,
apply
I won't
for.
travel to the USA because simply because of the hassle of filling in the forms and dealing with it all.
Yeah, so because some Americans, I saw the news came out and they said, "Oh, Europe, what are they doing, putting visas?" But America's been putting visas for ages on everyone. So anyway, I'm not having a go at the American viewers, but at your government. There's a saying, I love my country, but I hate my government. And that's the way
Yeah.
I feel about the UK as
Yeah.
well.
All I can say is visas are an inhibitor to travel. From my perspective, I can travel to many, many countries in the world. I can travel to Middle East countries. I can travel to Hong Kong, and of course the whole of Europe. And there's no visa required in lots of these countries. We went to, for example, we went to Oman last year. I went to Hong Kong last year. I've basically excluded going to countries where you need visas. It's too much hassle and expensive.
Someone's saying that you can fly to the Canaries for less than £50. Well,
Yeah, and then
that's a last minute deal, I guess.
yeah. Well, you know how that works. The Obviously the airports are paying these airlines to fly from the airports, and the reason they do that is because the airlines are often delayed and people spend a long time in the airport and spend money in the shops. If people spend money in the shops, it means they can put the rents up, and if the rents go up, the value of the real estate goes up. So it's all a bit of a Ponzi scheme in that respect. But that's basically how they finance the cheap flights, because the airports will pay these airlines.
Oh, so the airports will pay the airlines a cut of all the revenues they make from people shopping.
Yeah.
Yeah. And also, when you get on the plane, you probably have to pay £10 for a drink, and you might have to buy the toilet roll if you want to go to the toilet.
Yeah, I seem to recollect at one point, I don't know if it was Ryanair or EasyJet, they were proposing to charge people £1 to go to the toilet on the plane. That got scrapped, but I found that rather amusing.
Yeah, we've got a couple of minutes to go, guys. If you want to ask some more, the last questions here, 2 minutes. Let's see. I think there's a question here. Thank you. Can you comment? Are manufacturing type jobs a thing of the past, or is it feasible to reintroduce these to the local economies? I'll give my answer, and then you can give yours, Clive. I think when you say feasible to introduce, I mean, what do you mean? And I think you mean that the government is going to plan to do something, and I think that's always a bad thing. I think this Inflation Reduction Act, and I'm not saying it's a good thing, I think that's what they're trying to do, spend a lot of money to bring in like new technologies and stuff. So it might come back a little bit, manufacturing, but the more government tries to direct the economy, the worse it is, in my opinion, for the long term. But maybe it will come back in the West, because our economies are not in good shape. We have a lot of debt. So if there is a collapse, people will have to do things, and maybe our wages are not going to be as high as those in other countries. I'll let you finish with that, Clive.
Well, for a couple of 100 years, we've had the introduction of manufacturing by machines. They've been coming more and more. And I think these days, a modern car factory probably has more cars in it than it does humans. So it's a long-term trend that manufacturing is being replaced by robots and robotization, but it doesn't do away with the other tasks, such as the design, the thought processes, the engineering, the kind of thinking process that goes into designing the machines which make these devices. So I know if you buy an iPhone, there will have been some human labor, but there will have been a lot of thought gone into how it's been made. Same thing for a car. But realistically speaking, manufacturing is being replaced by robots. So I don't think manufacturing is going to come back. Of course, we'll still have artisanal jobs where people make homemade stuff, unique stuff, but mass-produced items pretty much are mostly produced by robots already.
Yeah, what you mentioned there, like artisanal, manufacturing or production, people making things like by hand, and also some luxury goods and things that are, humans have to do. I think that could make a comeback, because You look at, yeah, a lot of things that we buy today, high technology, they're really sleek and everything, but I think people also like the old things. So I think there's a potential there for that kind of stuff. And it depends on the individual, what your strengths are. I'm not really good at making things or DIY. So, and so I won't be trying it. So, oh yeah, Clive, just how about a robot barber? Yeah, no, I think barbers will remain, won't they, Clive? Even though I don't really need barbers that much anymore.
I'm not not sure I trust one.
Yeah, what about yeah, robot waiters? I don't think I would.
Now there you have a thing. We were in Hong Kong. It was earlier this year. Now we have robot waiters in Hong Kong. So you could go to a large shopping mall, sit yourself down. A robot will come up to you. You're supposed to put your order into your phone, but it'll absorb. It doesn't actually come up to you. Put the order into the phone, but then the robot comes to your table and delivers the food to your table. You take the tray off the robot, and then you can put. When you finish, the robot will come and you put your tray back onto the robot's arms, and it'll navigate around the people and find its way back to the kitchen.
Robot dentist. I wouldn't want to have a robot. Did you tip the robot, Clive?
Oh, I thought it was really cute. They got pretend eyes, but they're really cute robots. But they work, and they're very good. They're very good.
I think personally, yeah, things change. So yeah, manufacturing, like Clive said, is going to become more automated. But I think the same thing happened 120 years ago when they started making automobiles. People thought, oh, blacksmiths are going to go out of business. And they probably did, but they probably became like mechanics and stuff, and they opened a petrol, a garage and stuff. So I think people have to try to adapt. You can't think, oh, things are going to last forever. That's what I would say. And with that, Clive, I'm going to thank you for being on. And maybe if you have any last words for the viewers, that would be nice.
I think all I can say to people is keep your money invested wisely, diversify. Don't put it all in government bonds. That's a very dangerous thing to do. Don't leave too much in cash in the bank, but you need to keep enough to spend. But my real message is hold tangible assets. That does include gold, it does include equities, it does include property, and it does include things which people need and want and use.
Great. Thank you, Clive. Thank you, everyone, for being here, and I'll talk to you soon.
Thanks. Bye-bye now.
Bye.